Hey, what's up, everybody? Jake Fletcher here with eXp Realty in Miami, Florida. And we got to talk about interest rates because they're insane. They keep going up and up and up and up and up and up. And will they ever come down? Nobody knows. But in this video, what I want to do is talk about where interest rates are at right now and what it means for you if you're a buyer or a seller in this market. All right. So I'm in Miami, Florida, but the averages that we're talking about here are national averages. So they apply to anybody looking to buy property in the United States. So before we do that, though, I would like to invite you guys, if you find this type of video helpful or informational, go ahead and give a gentle smash to the like button, hit the subscribe button, ring the notification bell, and if you really want to be a rising star in my heart of hearts, you can share this video with somebody who you think might find it helpful, because that really all helps the channel to grow, helps to bring this to a wider audience, and I very much appreciate it. So, moving on, let's jump right into it here. So we're going to take a look at Mortgage News Daily. And from Mortgage News Daily, what we can see is these interest rates are actually coming from today. They're updated 4/22, which is the day that I'm recording this video. And you can see the 30-year fixed is at 5.39, okay, which is pretty dang high. You know, if we go over here to this peak on this chart, even, back in October of 2018, interest rates were only at 4.9. So, it's been a long time since interest rates were as high as they are right now. And even the FHA now is at 5%, right? So you can see 30-year fixed, that's in reference to conventional loans. And then you have the 30-year FHA, which is also a fixed loan, but it's not conventional. And you can see that actually the 30-year fixed conventional has risen 0.01% since yesterday when it was at 5.38. Day before that, it was at 5.35. I saw a 5.15 before that. I mean, they've just been going up and up and up, right? So I'm also going to talk at the end of this video about what I think is going to happen. I'll make a prediction for you guys. We'll see if I'm right. But, what I want to do is basically show you guys what this means if you're a buyer in this market. So let's go ahead and jump to mortgagecalculator.org here. Let's say we're buying a $500,000 house, right? And let's say we're doing 5% down. It's going to be a personal home. We're going to occupy this home. And our interest rate for a 30-year fixed rate conventional loan is 5.39%. So we're going to put that in here. Okay, 30-year loan term. We're in Miami-Dade, so property taxes can be a little bit higher. $4,500 is definitely not out of the ordinary. We're going to have 0.5% PMIs, private mortgage insurance, $3,500 home insurance. Let's just go with it. Monthly HOA, we'll just keep that at 0. And then conventional loan, we're buying, and let's calculate. So at today's interest rate of 5.39 on a $500,000 home, you're going to be paying $3,528, basically $3,529 per month for your monthly payment, okay? So, that's one thing. Now, let's compare that to earlier, just this same year, back in January. Let's see, back in January 3rd, we had 30-year fixed was at 3.41. So not even as low as it got. I had clients back, when it was more like around here and these levels that were locking in interest rates for like 2.6, 2.7, 2.8, 2.9 all day long, right? So this January 3rd, it's not even as low as it got, but it was this same year of 2022. So 3.41. So let's see what that interest rate would make our monthly payment. So 3.41%. Everything else we're going to keep the same. The only thing that we're changing is that interest rate. Let's go ahead and calculate that. $29.73. So as you can see, that's a difference of $556 per month of your monthly payment, right? So every single month you're paying $556 more for a home $500,000 home that you buy now than if you had bought that same home just a few months ago in January. So, if you multiply that out by a year, that's an extra $6,600 a year, basically. So that's a lot of money. It's a big difference. Well, let's see, what if you bought that, same $500,000 house even a little bit earlier, right? So let's say that you bought it right here at this trough. They got down to, man, can you imagine? Look at this, 2.2, well, that was the 15, 2.83. Let's just go with the 2.83 for the 30-year fixed. 2.83, same home. Everything's the same. So $28.23 per month, basically $28.24 per month, actually. So that's a difference of $700 more if you compare today's rate to that 2.83% interest rate. All right, so that's conventional loans. Let's just real quick look at FHA just for fun, right? So we have the 30-year FHA. We'll just go with January 4th, it's the closest I can get. So 2.98. All right, so let's go 2.98. Now here in Miami-Dade, the FHA loan limit is actually $460,000. So I'm going to change that purchase price for this example. And let's say it's a first-time home buyer putting down 3.5%. We'll keep everything else the same except the PMI is going to be a little bit more because it's a FHA. And if you have questions about what any of this stuff means, feel free to leave me a comment. My contact information is in the description. Feel free to reach out to me, especially if you need any help in the Southeast Florida area. So at those low interest rates there, back in January, the 2.98 FHA, you would be paying $28.47 a month, right? So for that $460,000 home, okay? Now let's compare that to today's rates, which is 5%, okay? So everything else is going to be the same. We're just going to try 5%, right? And see what that is. $33.64, right? So that's a difference of $517 a month that you're paying more now than you were just in January 4th of this year. Let's just go back to that lows. Let's go to the lows of, let's do this super low, 2.25. Let's see what the difference of that is. Just for fun, right? Just for shiggles. And boom. So that is actually $26.78 basically, right? So $26.78, that's a difference of $686 a month from the all-time lows of what interest rates were at, okay? So what does this mean, Jake? What does this mean if I'm a buyer in this market? Well, let me give you a little bit of context. In the real estate industry, there's a sort of rule of thumb called the rule of 10x, which basically means that, hey, for every 1% that interest rates increase, technically, theoretically, home prices should decrease by 10% because now that home is less affordable, right? If buyers' interest rates go up, that means that their purchasing power goes down, right? And it's also vice versa. For every 1% that interest rates go down, home prices tend to go up by 10%. But what we're seeing right now is that there's such a high demand for properties, especially here in Miami-Dade, and there's such a historic low of inventory. Like in Miami-Dade right now, we're around 3,000 single-family homes on the market, when in a normal market, we'd have about 7,000 or 8,000 homes on the market. So we're less than half of our normal inventory, but everyone's moving here right now because people can work from home. We're becoming more of like a tech hub type city. And it's just a super huge increase in demand. So we're not seeing that rule of 10x playing out, at least not as of right now. We're not seeing home prices going down in the market. What I am seeing is that some of the more highly priced, we'll call it some of the prices that are more fantastical or people kind of shooting for the moon, they're on the market for a little longer. They're ultimately selling for less than what the list price was. All right, so that's something to kind of keep in mind. But the homes that are really what I like to call HGTV certified or like turnkey ready, those homes are still going for a super premium. So if you're looking for a turnkey HGTV status type home, be still prepared to pay a premium for it, and it's going to be more expensive in the monthly payment than it would have been, earlier this year and especially last year. However, if you're looking for homes that need a little bit more updating, a little bit more elbow grease, those homes are starting to be a little bit less exorbitantly priced as far as the sale price goes. They might still get listed for a fantastical number, but are tending now to be, actually, I'm seeing a lot more sales that are less than the list price, whereas the whole past couple years I was seeing a lot more either sales equaling the list price or sale prices being a lot higher than the list price, right? Which means the seller tried to sell it for, say, 500 and it ended up selling for 550, right? We've all seen the stories. I've heard agents in other markets saying how homes have sold for $500,000 more, or in the luxury price range is $1 million more than the list price. So it's a crazy time to be in the market, but sometimes you have to buy, right? And equally, sometimes you have to sell. So what does this mean for sellers? What this really means for sellers is you want to, A, have a really good agent who's on top of all this stuff and can sort of read the room and what's going on in the market. And B, you want to be really just observant about how people are responding to your listing. Are people sending in offers that are below, at, or above the list price? How many offers are you getting? Has it sat on the market for a week and you've only gotten 1 or 2 offers, or maybe no offers? You need to really be conscious of what the market is telling you right now, because a couple months ago and a couple years ago, during that period of time, you could just throw anything on the market and it was going to probably sell for the list price or higher. Right now, it seems like at least a lot of homes, there's still homes going for higher than the list price, but a lot of homes are starting to either go for at the list price or, like I said, actually ending up selling for lower than the list price. So if you're a seller, you just want to be really vigilant with how the market is responding to your listing, okay? And don't forget, the first couple weeks that you have a home listed are the most crucial, because it's super hard to get people to come back and see your home again after you've had to do a price cut, right? And price cuts are happening in this market. I've seen an increase of agents sending out emails of price reduction, new price, right? Which tells us, hey, some of these, pie in the sky prices that people thought they were going to get, they ain't getting them, right? So there is hope if you're a buyer. If you're a seller, stay vigilant. Make sure that you're paying attention to what the market is telling you about your listing, because you want to be able to act quick. If you have it overpriced, or you have a pie in the sky price on your property and you're not getting a lot of fish biting on that hook, then you want to very quickly reduce the price to the actual market value. Now, I promised that you guys that I would make a little prediction, and I'm going to do that, right? So my prediction here is that the Fed is trying to kind of feel out where the sweet spot is between raising bank-to-bank overnight interest rates, which along with the 10-year Treasury bond have an effect on what mortgage rates are. So they're kind of trying to figure out where the sweet spot is. I think that interest rates are going to kind of bounce around this low to mid 5% range for the next few months. And I think ultimately, gradually, they'll be creeping up into the upper 5%. And then I think eventually, in about a year or so, we may actually be consistently in sort of like the 6% range, maybe low 6%. Mid 6%. I don't think we're going to see too much higher than low to mid 6% for the average 30-year fixed rate conventional loan, okay? Now, what I think is going to happen as far as inflation is a whole nother story, and I don't want to make this video too long because we're already over 10 minutes here, but what I expect to happen with home prices, as far as the increase in home prices, I think that we're going to see overall nationally that home prices are going to go from doing this over the last 2 years to doing more like this. They're still going to be going up, but it's going to be a little bit more of a level plane. It's not going to necessarily be a plateau trading sideways, and probably not going to see much of a correction either, as long as there's still very high demand and very low supply, because keep in mind, it takes years for builders to catch up to inventory, right? And it's a very tough market for people to feel like they want to put their home on the market right now to sell it, because unless they have to, because people feel like, hey, I don't want to list my home because I can't find anywhere to buy, and people can't find something to buy because people don't want to list their home. So it's like a crazy vicious cycle that's been going on over the last like year and a half, 2 years. And it's hard for sellers to justify jumping into this market right now. And I get it, right? And if you are a seller who needs to jump into this market, it's never been more important to have a qualified, experienced listing agent. That's what I am. I'm a listing specialist. So if you're in the Miami area of Miami-Dade or Broward counties, definitely give me a call or link up with me. All my info is below. But yeah, that's kind of where we're at. I think interest rates are going to continue going up. I don't think they're going to get too much higher than the low 6 to mid 6% in about a year and a half from now. Over the next like 3 to 6 months, I think we're going to be bouncing around the low to mid 5s. 6 to 12 months from now, I think we're going to be in the upper 5s, and then we're going to eventually get to those low 6, mid 6. But I think that's going to be kind of where things balance out. I think we're going to see homes appreciating still, but more at like a normal rate, like 4 to 6, maybe 7% over the next year versus 20 something percent over this last year, right? Now, keep in mind, real estate's hyper-local. Here in Miami-Dade, we could very well see our real estate market appreciate 10% while the surrounding, the rest of the nation only appreciates 6 or 7% or 5 or 6% because there's so much demand here with people moving to Miami-Dade. Last I heard, it was like 1,100 people a day are moving to Miami-Dade. So I'm here for y'all if you're relocating to Miami-Dade as well. So Jake Fletcher here with the Fletcher Group at eXp Realty. Hope you guys liked this video, and I'll catch you on the next one. Until then, hope you guys sell smart and buy bold. Peace.